have our analyst joining us on the show right now. We have Mileen Vasudeo joining us. Along with him, we have Mahantesh Sabrad, who's joining us on the show. Very good afternoon to all of you all. Thank you so much for joining us on this weekend edition of Your Trades. And Mileen, markets at 2023 high, at least Nifty this week. Where do you see it headed in the brand new series?
Good afternoon. If you see, Nifty was getting stuck in the range of 18,400 and on the lower side 18,100, but there was a strong support at 18,100 levels. Whenever Nifty used to go very close to 100, it used to bounce back very sharply. And today we have seen a very strong session, which clearly indicates, yes, that Nifty is heading to the prior all-time high, and even it can extend its gain further. So we are of the opinion that initial resistance is at 18,650 levels. Once that level is being crossed, yes, then you are going to see the prior all-time high, and then it can extend its gain further.
That's about the Nifty. What about Bank Nifty? That's just 150 points away from its life high levels. It's managed to tease and elude that level of 44,151.80 earlier. Do you see it happening in the coming week, Mileen?
Yeah, in preceding weeks only we could see that Bank Nifty would make a fresh all-time high and can extend its gains towards say 44,500 to 44,800 levels. So one has to trade with positive bias in Bank Nifty.
All right, so that's the take coming in the benchmark indices. But Mahantesh, come next week, we will all have to watch out for what's the cues coming in from the global markets, because US debt ceiling, that's the one that is actually on top of everyone's mind. Come Monday, we have to see how markets actually perform. But what's your initial take on that?
Global perspective, debt ceiling is something of an event which has been, I reckon, already factored in the markets. We are going to see perhaps some resolution coming into the debt ceiling talks. Having said that, debt ceiling being hit is not an event that we have seen for the first time for the markets. This has happened in the previous years as well. And we have seen markets actually overcome the jitteriness associated with that. What is more important for the market ahead is, are the interest rates really going to peak out? There is broadly an indication that at least Indian markets would have seen interest rates peak out. Global markets, most of the central bankers are veering towards stopping the rate hikes, and therefore the interest rate peaks is somewhere closer. That should signal that the markets are now well and truly set on a fundamental course. Results will dictate the move ahead.
And we're just thankfully at the fag end of the earnings season. It's been a long drawn one, but nonetheless, Mahantesh, the takeaway seems to be that the FMCG index and auto index are the ones which are sitting at life high levels. If at all you had to take top bets from these two sectors, which are the stocks that look best placed?
Surprisingly, if you look at the FMCG players and the results that they posted, they have shown a big decrease in material costs, or rather, I would say the inflation worries that the FMCG stocks used to have, and the strain on the profitability caused by that at least is now a thing of past. We haven't seen volumes recover for FMCG as yet. The urban side of the FMCG market is indeed growing, but the rural side is stressed. The volumes have actually degrown. Now the volume degrowth is running into the third year. Having said that, from a market perspective, the indices are doing really well, because now the expectation is that we will have not just volume growth coming back after a 3-year lull for the FMCG companies, we will also see margins perk up. That should signal good results from the FMCG companies. As far as automobile companies are concerned, I think they are reacting to the interest rates peaking out, because they are quite interest rate sensitive. Most of these stocks and the companies within the index depend on interest rates or lower interest rates to push sales. So peaking of interest rates and potential fall of interest rates should signal better demand ahead for automobile companies.
Let's talk about the Adani Group pack. What a stellar performance this week. If you look at the top Nifty gainers for the week, among that list, Adani Enterprises and Adani Ports are the one that actually shine. Also, not to forget that this week you had Adani Ports that erased all of its losses that it had posted post that Hindenburg report. The SC panel, what they had to say in their report has kind of like sparked that rally in those counters. And apart from that, you also had ET Now exclusive story that said that GQG is actually steadily buying some stake in the company. So what's your take on the entire Adani Group counters? Do you think now you can actually put the past behind and look at these counters afresh?
Adani Group companies have posted actually good results. Let's come first to the result portion before I talk about what really is happening with the overall situation as far as investors are concerned. The results of the companies have been steadily rising and better, but the debt overhang for the Adani Group companies has not yet been mitigated. Remember the Adani Enterprise IPO, or FPO, which was supposed to hit and bring in welcome relief as far as the debt concerns of the group were there. That situation is still where it is. And where, as far as the stocks regaining composure, I think the overall markets are also perking up better. And therefore, it was but expected that underperforming stock or set of underperforming stocks should recover. But that I will still conclude by saying that the debt worries for the Adani Group continue to remain, and I don't see any picture thereof changing for the better just as yet.
That's the take coming in on the Adani Group counters. We'll actually take a break on this edition of Your Trades. When we come back, we'll discuss more about the markets and tell you what are the cues to watch out for the week.